Hello everybody, welcome back. Let's have a quick look at Bitcoin for today's price action, shall we? So it's all looking a little droopy, I have to say, but there's more to it than that. We can have a look at the Nasdaq again. When you talk about bullish charts, I mean, look, this is Nasdaq on the weekly, and again, there is a correlation with Nasdaq and Bitcoin, but it's not what you think. It's mainly tied to the dollar index, and that's obviously why we look at the Dixie, and we look at it frequently. The Dixie's, well, I mean, it's consolidating after this last run, and I mean literally the last run, the run that technically was over from the Ichimoku cloud telling us to get in the trade and then out the trade. Not that we took the trade, we're not FX traders here, but if we were, that's what you would have done. And now what we're looking to do, I suppose, is see if we can carry on with the uptrend. Now, the way that the chart is postured here, it certainly suggests that it is going to continue to go up. This is a daily chart, very bullish. Even the weekly chart is pretty bullish as well, to be honest with you. I mean, every aspect of the chart is bullish, so you have to expect bullish outcomes from a bullish chart. I mean, if we saw something like this take place on anything, we'd be like, okay, let's see how it's going. Is there anything to be concerned about? Not particularly. We're above all major moving averages on the weekly. The daily is consolidating after our last big push up. 4 hourly is more or less reclaiming some bullish territory, but it's neither here nor there at this very moment, I have to say. I mean, if we were to look at this is classic consolidation, waiting to see if it'll actually drop off or continue up. So there is an element of, on the shorter term time frames, doubt if it'll go immediately up or down. I think what we saw then today was the drop off over here. This is Nasdaq on the weekly, and we've already started the week with a big dip down and an attempted buyback. Pretty much exactly the same as what you'd see with Bitcoin, really. It's pretty much exactly the same. If we have a look at the chart itself on a daily, there's no redeeming factors on this. Not really, a bit of hidden bullish divergence. Again, there's an indicator I'm going to start plugging. It's free. It's a freebie. There's a member of my Telegram, and I think there's a few of them have clubbed together to create basically these indicators that I'm using here, which is basically exactly the same thing that I use on my normal charts anyway. But if you don't want to pay for TradingView, because obviously it's a lot of money, you can download 2 indicators. It's basically, it has all the moving averages that I use, plus the Ichimoku cloud, plus the money flow index and the RSI, with bullish, bearish, hidden bullish and hidden bearish diversion indicators all built in. I'll make a video on it when I have a bit of time. At the moment I don't really have time because, like you say, we're all locked down with COVID in our house, so kids are at home, and it's just a bit of a, time is not really, it's the most valuable commodity I have. In fact, I don't have it, so and I hope to gain it soon. So yeah, I mean, there'll be more on that. If you want to join the Telegram anyway, ask about, and you'll be directed to these indicators. Like I say, you don't need to pay for TradingView. If you want to use the charts that I use anyway, the indicators that I use, they've all been bound together in 2 packages that you can just apply to the chart, and you get all of this basically for free. Can't go wrong with that. Right, so outside of that, let's focus on what's going on with Bitcoin. So this is Bitcoin still holding up with that $40,000-ish area, which is basically the what I would consider to be roughly the bottom. I'll be wrong when I'm wrong, but for the moment I'm holding on to that as what's taking place. We've got this descending channel that we're still within as well, so there's a lot of support around this zone, and if we were to break down, then we can tag these lower zones. And again, this is something that we can hold on to as well. So every day that goes by, this descending channel is quite steeply descending, and every time we tag it is going to be a super support that should springboard us up at least to the top side of the channel. So really, if you do have the time, I mean, this would be a great way to even just trade it if you have the capacity and understanding and risk management to do that kind of thing. If you're into derivatives, I mean, it doesn't get as simple as this really, but for the moment we are at a super support, and we'll have to see where this daily closes. And if it closes in like a shooting star style wick, then that would be great, and it would offer more upside to at least the top side of the channel. But for the moment, it's the same as it was for the last 4 days, revisit 40,000, revisit 40,000, revisit 40,000, revisit 40,000. Now, if you're choosing to view the wicks, okay, and just the wicks, and we choose to view it on a 4-hourly chart, and again, just the wicks, we do have all these drives of bullish divergence on the RSI if you choose to view the wicks. Now, if you're looking at the candle bodies, this was the lowest candle body. These are ever so slightly higher. So actually, the candle bodies don't print bullish divergence at all. It just doesn't print anything. But if you were to choose the wicks, then that's what it would be, and it is quite pronounced at this point. So again, I have to keep reiterating what I think about this, just for the sake of these videos. But I mean, I do expect a bounce to take place, like a decent one, into the mid 40s at least. And if we break the channel, then up towards 46, and if we break that back up to 49, basically being the full accumulation zone that we've been talking about all this time. And if you just tune in for the first time, if you don't watch me, this is the accumulation zone. As we dipped down into this, which again we predicted, and at the bottom of the accumulation zone is the 40,000 zone. Top of the accumulation is the 49,500, and I expected that this would be the range that we accumulate within. We have been lulled into a false sense of security by hanging around in this topside area for such a long period of time, but even as we were in here, I did keep saying that there's a very strong chance, or maybe not a strong chance, but a good chance that we come down to what I expect to be the overall accumulation range, which is all of this over here, and that's where we are right now. So again, my thought process, it hasn't changed. It is the same. My expectations of this is the same. I can entertain a little bit further down for price action, but if we start breaking below 35,000, obviously that is a real problem for me at that stage, and I think I'd have to reassess the entire strategy to cope with what would be probably an even further prolonged downtrend. And there's reasons why that might happen, and it's not so much to do with this chart essentially, it's to do with the other things that we've spoken of, basically being a strong dollar, and that dollar being driven by the Fed tapering. And if you really think about it, I mean, you can't really stop that. There's nothing that can be done. And I was saying, very very briefly on the Telegram, it's like what would be worse for us generally? A pullback in the market, maybe going into a bear market potentially, for what it is that we own in crypto, and having to sustain that if you're choosing to hodl it for what could be a 6 to 9 to 12 month period potentially before it even turns around, or hyperinflation. I think hyperinflation would be a hell of a lot worse. It would basically be horrendous. And so, love it or hate it, Dixie up, Dixie down, the right thing is being done. They have to taper. You can't carry on this way, because basically you'll end up going down to the shop one day and it'll cost you like 20 quid to buy a loaf of bread. You go back the next day after that and it'll cost you 100 quid. These are extremes, but essentially that's what would happen. That's where it would head inevitably if they carried on the way that they are. There's a reason for the parabolic run, and the reason why it came so early, it was because of the money printing. Everybody's saying, "Oh, the dollar's going to die. The dollar's going to die." Well, the dollar is under control in a way. Over a long period of time, it does drop off. Obviously, inflation is supposed to be about 2% annually, and so with that in mind, of course, that will add up year after year after year after year after year, inflation is inevitable for all currencies. But to have hyperinflation, and at the moment, America's inflation is about 6%. UK is about 4%, I believe, thereabouts. So these things need to be sorted out, because they'd impact us a hell of a lot more than it would do for a downtrend in Bitcoin. And let's face it, Bitcoin will turn around. It'll always turn around. I mean, we're talking fundamentals here. We're talking fundamentals of Bitcoin, and we're talking fundamentals of fiat currency. I mean, we know how these things are going to pan out. They work out inverse of each other eventually. So it's not the end of the world if we do go into a prolonged downtrend. Just hold on to it, just chill out, just enjoy. It'll work out like it always has done. But when it comes to the reality of what's going on in the economy, you can't fault the Fed for doing what they're doing. They have to do it because it would impact you and me a hell of a lot worse if they didn't. So at the moment, it's not the worst thing you've ever seen. Believe me, this is not the worst thing you've ever seen. In fact, I would argue that this was worse, a lot worse, and this was faster. This was almost like a rug pull event, whereas this at least was the beginnings of a consolidation, which then just got kicked down the stairs by a couple of things. First of all, the new variant, the Megatron virus that we coined, and then secondly the tapering. So two things at once, two major things, huge things that are really nothing to do with Bitcoin, but it does implicate negative price action, because just by default, just through association with being we call it a store of value, but I mean just through association with the Dixie and with traditional markets. So it's less to do with Bitcoin's chart, which is why I'm still relatively bullish on the market itself, because as far as this chart's concerned, it's not like it's not quite as scary as if you were to look at Nasdaq, for instance. And if you go to the Nasdaq on the weekly, Nasdaq looks like a proper change of behavior at this point. We'll have to see how this week pans out. I mean, it's not very often that we have wicks on the weekly below the 20 weekly. We do have them, and at the moment, this is what this currently is. I mean, it was a closure for the first time in a very long time. In fact, let's have a little look. For the first closure below, since the pandemic began. So this is the first closure below the 20 weekly that we've had in over a year, since March 2020, so getting on for a couple of years almost. So it is a change of behaviour for Nasdaq, and so that is slightly concerning, to say the least, at the moment. But again, there's a reason for that. Bloody tapering, isn't it? It's tapering. Yeah, dollar goes up, everything valued against dollars go down. Generally speaking, that's a very blanket overview, layman's term of way of explaining it. But essentially, that's the way to look at it in this instance, because tapering has major implications for anything that's valued in dollars, and if there's anything that's valued in dollars, it's crypto, because crypto's traded in crypto dollars. So that, we all know that stable coins are dollars essentially. They're not actual dollars, but for all intents and purposes they trend with the dollar, because they are pegged to the dollar. So whatever the dollar does, they do. And so if there's ever an asset which is solely traded in dollars, it's going to be Bitcoin, isn't it, really? So we'll leave it with you there anyway. Like I say, for the moment, it's still looking okay. I'm not particularly worried about it. It's still within the zone that we've planned out all this time. And if we do break down from the 40,000 zone, start closing candle bodies into the upper 30s, I will certainly be holding my breath, definitely. But for the moment, things seem okay. For the moment. And when I say okay, I mean not that bad. Let's face it, it's not okay, but it's definitely not that bad. I strongly feel like the lows will likely be in, but a lot of that will depend on dollar's strength at the moment. I feel a lot of it is basically priced in, to be honest. But if we do go on to make another significant rally for the dollar, as in like quite soon, as in this week or even next week, then that could easily push us down further. Right, I'll leave it with you there. Let's not hold our breath for the moment. Let's just have a sigh of relief, and take it easy, everyone. Take it easy.